Investment accounting is challenging and nuanced, but if you can see enough examples, you can get a good sense of what sets the different categories apart. I've therefore created this 10-question quiz to help you practice and think through the different classifications and methodologies of investment accounting. You will have 15 seconds to answer each one of these 10 questions, and I want to know how well you did after you've taken this quiz. Please comment below once you've completed the quiz and let me know how many you got correct. All right, let's dive into the quiz. Question number 1. Available for sale debt securities are A, held for the purpose of selling in the near term, B, held with the positive intent and ability to hold until maturity, C, not classified as either held to maturity or trading, or D, held at cost. The answer is C, not classified as either held to maturity or trading. Debt securities not classified as either trading securities or held to maturity are by default classified as available for sale securities. Now, with available for sale securities, any changes in fair market value will be recognized in other comprehensive income. Question number 2. An investment held as a trading security will reflect unrealized gains and losses on what financial statement? A, statement of other comprehensive income, B, income statement, C, not reflected on any financial statement, or D, the balance sheet only. The answer is B, the income statement. Unrealized gains and losses from trading securities are reflected on the income statement. This is the result from increasing or decreasing the fair market value of the investment on the balance sheet. Question number 3. What category of investment will be held at amortized cost? A, trading securities, B, available for sale securities, C, held to maturity securities, or D, equity method investments. The answer is C, held to maturity securities. Held to maturity investments are a category of investments for debt securities where a company has the positive intent and ability to hold until maturity of the debt investment. Question number 4. If you see unrealized gains and losses in other comprehensive income, what type of investment will you find on the balance sheet? A, trading securities, B, available for sale securities, C, held to maturity securities, or D, equity method investments. The answer is B, available for sale securities. Available for sale securities are reported on the balance sheet at fair market value, with changes in fair market value recognized in other comprehensive income. They're not recognized on the income statement like trading securities, and they're not held at cost like held to maturity securities. If you've gotten any value out of this video so far, please smash that like button and consider subscribing. Okay, let's continue our quiz on investments. Question number 5. Realized gains and losses from selling any investment will be recognized on the A, balance sheet only, B, other comprehensive income, C, not recognized, or D, income statement. The answer is D, income statement. Realized gains or losses, regardless of the investment category, will be reflected on the income statement. We're not talking about unrealized gains. We're talking about realized gains from selling an investment. Skynet Enterprises buys $10,000 of Apple stock on 1/1/2025, and they classify the investment as a trading security. If the fair market value of the Apple stock is $20,000 on 12/31/2025, what will be recognized on the income statement? A $10,000 unrealized gain. B, a $10,000 unrealized loss. C, nothing is recognized on the income statement. D, a $10,000 realized gain. The answer is A, a $10,000 unrealized gain. Since the shares of Apple are classified as trading securities, any changes in fair market value will result in an unrealized gain or loss recognized on the income statement. The math here is there's a $20,000 fair market value as of 12/31/2025, and you subtract the cost basis, $10,000, to ultimately get a $10,000 unrealized gain. Your Apple stock has increased by $10,000, and since it has increased, you're going to recognize that unrealized gain on your income statement. Question number 7. Nakatomi Corporation buys a U.S. Treasury bond on 5/31/2025 for $100,000, and they classify it as a trading security. The Treasury bond is worth $95,000 as of 12/31/2025. What is the journal entry to mark the investment to fair market value as of 12/31/2025? A, debit unrealized loss. Credit trading security marked to fair market value. B, debit trading security marked to fair market value. Credit unrealized loss. C, debit realized loss. Credit trading security marked to fair market value. Or D, debit trading security marked to fair market value. Credit unrealized gain. The answer is A. You're going to debit unrealized loss and credit trading security mark. Since the Treasury bond is classified as a trading security, any changes in fair market value will result in the unrealized gain or loss recognized in the income statement. In this scenario, you have a $95,000 fair market value for our Treasury bond with a $100,000 cost basis. This is going to result in a $5,000 unrealized loss that we're going to recognize in the income statement. If a company buys enough shares of an investment where the company has significant influence, what type of investment accounting would you apply? A, trading security accounting. B, available for sale. C, held to maturity. Or D, equity method accounting. The answer is D. You're going to apply equity method accounting. Equity method accounting is a method used to account for an investment where an investor has significant influence over the investee. but they do not have a controlling financial interest. If you have control, you're going to consolidate the entity. That's a key distinction between equity method accounting and consolidation accounting. Equity method, you got significant influence. Question number 9. Distributions or dividends received from an equity method investment will be recorded as A, a distribution dividend income, B, a realized gain, C, a decrease in the investment, or D, an unrealized gain. The answer is C. It's going to be a decrease in your investment. Dividends and distributions will reduce the equity method investments balance. Equity method accounting looks a lot like partnership capital accounting. The income from the investment will increase the investment, while distributions and dividends will reduce the investment's balance. Last question, question 10. ASU 2016-01 made a significant change to accounting for investments. Equity securities with a readily available fair market value have to be recorded as A, trading securities, B, available for sale, C, held to maturity, D, cash and cash equivalents. The answer is A, trading securities. ASU 2016-01 minimized the ability to record equity securities as available for sale. If an equity security has a readily available fair market value, the unrealized gains and losses need to be reflected on the income statement. All right, that is the conclusion of accounting for investments, the quiz that you just took. Tell me, let me know in the comment section below how many you got right out of 10. I hope you learned something from this quiz, and I hope you have a good rest of the day. Take care, and I will see you in the next video. Yeah.